It is fair to say that the past period on markets has really been driven by uncertainty and fear. Wherever you look, there's been significant headwinds that the markets have been moving into. We've seen broad-based corrections across the indices, many of the leading indices down by 10 to 15%. Of course, there are a range of different uncertainties from earnings season to the Federal Reserve and their upcoming rate hike cycle, and of course, valuations have been ever persistent discussions over this past period. But whatever publication you read, whatever video you might be watching, the Russia-Ukraine geopolitical situation really has been top of mind. And so today we're going to unpack each of these four contributing factors. We'll of course unpack all of the latest news and developments on the Russia-Ukraine front. We'll talk about where the markets may head depending which situation evolves out of this current situation in Ukraine. It really is an important discussion as investors ask, why are markets falling? And then what happens next from here? And so before discussing each of these four factors, I think it makes sense for us to take that step back and have a think about what is the current Ukrainian situation. As we understand, of course, troops have been assembling on the border. Depending on which publication you're reading, up to 150 to 190,000 troops have been assembling on the border surrounding Ukraine. Russia sent a list of security demands, including that Ukraine would withdraw its application to enter NATO, as well as a range of different factors surrounding militarization around the east of Europe. And now Putin has just recently recognized two separatist regions. They've recognized their independence and reportedly stated on a peacekeeping mission, these troops have now entered these regions. This has been the latest development. It's caused a lot of fear and uncertainty, and now many of the countries led by NATO and EU have been starting to develop and roll out sanctions. These are initial sanctions. They've stated that they will be escalating sanctions depending on how the situation evolves, though these have started to be rolled out, mostly focused on the economic front. If we have a look at one of the most significant ones, Nord Stream 2, which is the massive gas pipeline, which has been constructed but not yet finalized and in operations, has been frozen between Germany and Russia. As we know, of course, Russia supplies up to a third or above a third of the gas into the European region. So this is a significant economic impact. It is an evolving situation. Nobody knows what's going to be playing out from here. Of course, now that Putin and Russia have recognized these two separatist regions as independent, it's really up the ante and the intensity about this current situation. We know that Ukraine and Russia have got an intertwined history, both on a social and a cultural front. Of course, Ukraine has started moving towards a more Western and democratic lens, and this is what's been driving a lot of the uncertainty around this past period. If you are interested in having more of an understanding about the Russia and Ukraine situation, we've explored this in a previous video, so we'll leave a link to those up above. And I would be keen to know your thoughts on it all as well, so drop in a comment below what you think is happening in this current situation, and how do you think things will evolve moving forward from here? And so then I guess the question is, what could conflict mean? And now I know that a lot of people think about the economic and the market impacts, but I think first and foremost, we really want to discuss the factor that this is a humanitarian discussion on the first level. Most important is these are people's lives. This is a situation and nobody wants to see conflict because of course, these are humans. These are people that this could impact. And I think this is the most important. So my heart goes out to anybody who could potentially be affected and anyone who is potentially involved in this situation. So I think that's the most important part. And then of course, there is potential market and economic implications that could flow through depending what happens. I think it is worth noting as well that markets dislike uncertainty. In fact, markets often dislike uncertainty in pre-war periods more than actually the current situation once war is potentially engaged in or conflict is engaged in. It's interesting if you look at the past periods in terms of pre-war and the uncertainty, depending on if the war wasn't just sparked on a one-off, but if there was a bit of a pre-war build-up, the volatility actually in that prior period is often higher than in the post-period once the actual discussion has started and the conflict has been engaged in. You can see here in some of these periods from the Vietnam War, the Gulf War, Afghanistan, Iraq, the Crimean crisis, which of course is close to home in the Ukrainian front. We can see here that in the post-period, which is outlined by the grey, there was uncertainty and volatility. In many cases, just before the actual event itself was officially announced or the incident begun, there was a sell-off, there was a pullback, there was uncertainty and volatility prevailing. But after that period, there is often an uplift, or at least the market is able to digest it. And then, of course, depending on what the situation evolves, the market will then flow through from that. Now, nobody knows how the situation is going to unfold. It's an evolving situation, and of course, it's a very delicate one now. And whichever direction the situation evolves into is going to be an indicator and a key driver about how markets will react. I do think it's worth noting that there is obviously the ability for economic sanctions to affect growth. That will be yet to be seen how broad-based that is. And it is also worth noting as well that particularly commodity prices, with Russia being a big energy provider into the rest of Europe, these are going to have a significant amount of exposure to everything that's played out. And we've already seen this in energy prices more recently. Of course, the Black Sea surrounds the Russian and Ukrainian border. This is a significant travel route as well for grain, so there could be rising input costs for food costs as well. But all of these are still yet to be seen, and the fact of the matter is that rising input costs for many of these factors, whether it's energy or food, could have the end result of being inflationary. And of course, we're all familiar with the inflation discussion that's currently playing out and the impact or the effect that that could have on central bank decisions moving forward. And so then I guess that brings us back to our core discussion about why has volatility emerged. Before we explore these 4 key factors, if you've enjoyed the video, don't forget to hit the like button and make sure you've subscribed and turn your bell notifications on so you won't miss any of our daily updates. But this brings us to our 4 different components. Of course, there's geopolitical concerns, earnings season that we're in the midst of, Federal Reserve rate hike cycle, which they've telegraphed and forecasted, and of course the valuation discussion. I think it is worth noting as well that this current situation with Russia and Ukraine is not operating in a vacuum or in isolation. Yes, it's definitely been a key contributor to the uncertainty and the volatility that we're seeing on the market, but we'd already started pulling back and seeing a drawdown and a retracement in global indices and share prices since January. So this has only been one additional component to that. Of course, first and foremost, the geopolitical concerns. The markets dislike uncertainty. Risk premiums are rising, which of course will affect potential projected returns. And it is worth noting that if there is a conflict announced, that does have the ability to see a sharp downturn in terms of share prices. Who knows how that could look, but if there is anything that's announced and unfortunately conflict emerges, then there is that possibility of a significant downturn in terms of the shorter term. It is worth noting that the supply chains are at risk, as we mentioned, which has the ability to be inflationary. And of course, economic sanctions overhanging is a big question mark and uncertainty about how that will play through. In terms of earnings season, 78% of earnings beat expectations on the S&P 500, which we can use as a proxy for global growth. Having a look at where we currently sit, the average earnings growth is 31%, which is healthy. We've talked about it on the channel before, but underlying economic recovery is still intact at this stage. There was questions about how that was going to play out, but so far, and of course we'll have to wait to see how the central banks and these economic decisions are made, but so far the economic recovery is intact, which means that over that more medium to longer term, the trajectory is still there. Of course, with a lot of the earnings recently, there's been a few key highlights that have been mentioned. Firstly, supply chain uncertainties and of course increased costs, which have to do with potentially the virus compliance, as well as increased labor and wage costs, which we're starting to see flow through. And we've seen how important pricing power is. Those companies with pricing power have been able to pass those prices on, those rising input costs onto the consumers, and there's strong economic consumption and demand still flowing through. So they've been the biggest beneficiaries, being able to maintain those profit margins. Of course, the Federal Reserve rate hikes. This is key. That next FOMC meeting, March 15th to 16th, a lot of investors have got that circled out in their diary. The question is, will we see a 25 or a 50 basis point rise? We know that the markets and the bond markets are starting to price in 4, 5, 6 rate hikes for 2022. Of course, the uncertainty on the geopolitical front may mean that there is less of a need to really amplify those rate hikes and more of a wait and see approach to see what happens in terms of the rest of the broader macroeconomic stage. But of course, as quantitative easing winds down and we're seeing the taper play out, QT is the next stage of that unwind as the balance sheets start to get unwound. We know how expansionary this past period has been for balance sheets, and so of course, reducing the liquidity is going to be an interesting one to see how that flows through and impacts the economy. Interestingly too, we have seen safe havens beginning to be sought, whether it's the US dollar, whether it's the treasury bonds, and of course gold and silver, which have started to have their bid. So we'll wait to see how those flow through. And then I think valuations. It's been a key discussion really over the past period. Valuation compression has occurred across sectors. We all know about what's been happening in terms of the technology sector. Rising bond yields have contributed, of course, to the discounted cash flows having a higher discount rate, which ultimately means that they're going to have lower present values. But we have seen valuation compression really happening across a range of sectors. The rest of the market and investors, analysts and economists now are tossing up. There is a lot of divergent views. Is this a short-term retracement, or is this the start of a broader correction, or even something more significant than that? There are a lot of questions, and of course, the only way we'll be able to have answers is by waiting to see how things will play out and with time. So we'll keep watching. It is worth noting, of course, that these geopolitical concerns, as we've mentioned, they're not happening in isolation. There are a range of contributing headwinds and factors that have led to this uncertainty and the weakness in terms of share prices that have seen corrections across the broader market indexes. Just wanted to finish off and say that, of course, hearts are with everyone who potentially may be affected by everything in this evolving situation, and hoping that there is a resolution and a safe resolution reached as soon as possible. Thank you so much for joining us. Hope you enjoyed the video. And for now, stay well and happy investing.